Hello, Reveal readers and listeners. I'm Byard Duncan, our engagement reporter. I'm here once again with Aaron Glantz and Emmanuel Martinez. How's it going, guys?
Good, how are you?
I'm good. So we're going to talk a little bit about the redlining investigation you guys came out with last month, but a quick reminder about what it was all about. So our analysis found that African Americans and Latinos are still denied conventional mortgage loans at rates far higher than their white counterparts. This is decades after laws were passed to ostensibly prevent that. And your analysis found the pattern of modern-day redlining continuing in 61 metro areas across the United States. And it was particularly bad in places like Philadelphia and Washington, D.C. This story we put out everywhere. It was in local newspapers. It was on more than 450 radio stations across the country. And it was also part of a two-part segment on the PBS NewsHour. And a lot's happened since it came out.
It's been a tremendous whirlwind of impact. Here's just a taste.
Ford has sparked national outrage.
Next month, I'll be holding hearings to get a grip on the root causes of this problem, and most importantly, hold those accountable.
I am aware of it, and frankly, I'm disgusted by it. We have launched an investigation into this.
Within a few hours, the top Democrat on the Senate Banking Committee expressed outrage that in this day and age in America, we still have this type of discrimination.
There's a research group known as Reveal.
I've shared with your staff a recent article from my hometown newspaper.
The nation's top banker had to respond.
My question is, what can the Federal Reserve do?
Racial discrimination in mortgage lending and in any kind of lending is completely unacceptable. And wherever we have authority, we will use it to stop that from happening.
So since the story came out, we've gotten more than 1,500 questions from listeners around the country. We tackled many of the higher level ones in a blog post that we're going to add as a comment to this Facebook post. But we do want to jump into a few of the more granular ones. And that's why we're here today. So we'll get started. One that came in right after the episode aired, I'll put this one to you, Aaron. Someone asked, are there any bills in the current Congress that would improve data reporting that would help in identifying and preventing redlining and discriminatory lending?
Well, the kind of unfortunate answer to that question is that Congress is moving in the opposite direction. So one of the things that we spotlighted in that sizzle reel that passed was that Sherrod Brown, who's the ranking Democrat on the Senate Banking Committee, was saying that our investigation showed how important this data is. And the reason he was making that comment was because at the exact same time that our story came out and that all of these state attorney generals are launching investigations and the city of Philadelphia is holding hearings, that Congress was debating a rollback to the Dodd-Frank Act, this huge law passed to secure the banking industry after the housing bust. And one of the things in this law that has passed the Senate, actually with bipartisan support, both Democrats and Republicans, was to remove the requirements on 85% of banks and credit unions that they provide data on their borrowers' credit scores and debt-to-income ratios so that people like myself and Emmanuel can go in and find out what kind of lending disparities there are. So if you remember in our story, the American Bankers Association, the Mortgage Bankers Association, and many of the banks we reported on said that it didn't matter that we found that people of color were more likely to be turned down on a mortgage even when they made the same amount of money as whites, and even when they were trying to buy in the same neighborhood, and even when they were trying to take on the same size loan, because there was this other information that we didn't have access to. Credit score, right. Debt-to-income ratio. So at the same time they were saying that, to diss our story, they're going to Washington, they're lobbying Congress to keep that information secret in perpetuity, and right now they're winning.
So essentially it makes doing a more comprehensive analysis or trying to add that missing piece that much harder going forward.
It's going to be hard for us to answer the questions that we weren't able to answer in the story so far going forward if President Trump ends up signing this bill.
Next question, good one for Emmanuel, a stats question. What did the stats of lending discrimination look like before the mortgage crash?
Yeah, so if we look at like 2005 and 2006, like years leading up to the crash, in terms of numbers, those had some of the highest number of applications and loans made. And by comparison, in 2006, we're looking at like 34 million mortgage applications in that year, whereas for 2015 and 2016, we only looked at 30 million. So just shows you the volume that was going on that year, And partly it was because it was so easy to get a loan at that time. People were getting loans very easily, and a lot of it had to do with what's known as reverse redlining, where people of color were being targeted for predatory loans, meaning they had higher interest rates, balloon payments, and thus were more likely to default. And because there are so many of those loans going out to people of color, that's why we defaulted. And now credit has dried up, and we're slowly starting to see it back, but not to people of color.
Is there a relationship between the volume of loans being taken out and the severity of redlining, or does your data not really speak to that?
That's a totally different analysis that we could do later on. But right now we were just looking at denials in post crash.
Got it. Another question for you, Emmanuel, that also gestures at a point Aaron made earlier. How can credit scores be discriminatory? As Aaron mentioned before, a critique that some people gave of the analysis was that how can you really be certain of all this discrimination without looking at credit scores? So how can credit scores be discriminatory?
So credit scores and mortgages kind of have this chicken and egg relationship, whereas one of the quickest and easiest ways to get a good credit score to build your credit up is by having a mortgage. But you also need a good credit score to get that mortgage. Okay. Yeah. So, and the reason why having a mortgage is one of the best ways to get a good credit score is because it reflects both on time and delinquent payments. And credit cards are another form of line of credit that operate that way. And the reason why that's important is because, medical emergencies happen, funerals happen that for some reason cause you to miss a certain payment. And if that happens to you, then you have the other 99 on-time full payments that you've made on your mortgage. And that's how you're able to kind of build credit, because you're making more on-time payments than delinquent ones. Well, that doesn't work for rent, utility bills, phone bills, payday loans. This area of credit that people of color normally operate in, because they don't have access to credit cards or mortgages at the same rates as their white counterparts. So when they have a medical emergency or a funeral and they miss that one utility payment, they forget they don't pay rent, but they've made it on time for 5 years or what have you, that's the one delinquent payment that's going to wreck their credit score.
Because all the other things they're paying off theoretically on time just don't really count toward their benefit.
They're not. They're seen as invisible according to credit bureaus.
All right, here's one for Aaron. How is information about race collected on home loan applications? This is something we got a lot of questions on social media. I thought it was illegal to ask questions about race on those applications.
So since 1975, the government has been asking about race on loan applications. And it's because of this law called the Home Mortgage Disclosure Act. And 50 years ago this month, or 50 years ago April, President Lyndon Johnson signed the Fair Housing Act, and it banned discrimination in housing in America. But how can you prevent discrimination in the lending market if you don't know the race of the people who are trying to get loans? So in 1975, Congress came back and they passed this law, and it required that banks start asking borrowers a lot of questions about their profile, so that the government could collect data and go after bad actors. And so the banks ask you what your race is when you apply for a loan. You're not required to answer. If you don't answer, the bank has to make a good faith effort to fill in the blank. So if they think
Based on what? Based on
you're looking at you, their experience of you, your name. So the data integrity is not 100%, but it's the best that we have to go with. And by the way, not every bank does this kind of aggressive follow-up. And if you look into the data on our app, one of the things that you can find out in the market share analysis for each bank is not only the lending breakdown by race, but also no race. A certain percentage of borrowers for every lender, no race will be entered. And this is completely normal given the setup that I explained. But if you really look around, you'll find that there are some banks where 70, 80% of the race is empty. And those are banks where regulators might take another look and say maybe this particular bank or mortgage broker or credit union is trying to cover something up.
Yeah, is there an incentive potentially for a bank to leave that space blank and sort of plead ignorance later?
Yeah, or they just don't care. Right, that could be another factor. Is like they're just operating in this world where they're just not considering people's civil rights while they're filling out this paperwork. I mean, this law exists for a reason. The reason they ask about race is to prevent discrimination, and it's been that way since 1975.
Got it. Here's another one for Emmanuel. This question, I'm presuming, came in from someone in the Chicago area. Have you researched current Chicago's lending practices? It should be interesting.
So from our analysis, I was able to look at the Chicago Metro Division. So it encompasses 4 or 5 different counties, Cook is being one of those. And when we look at the demographic breakdown, it's about 50% white, and another 40% of that of the total population is Black and Latinos. But when you look at the lending breakdown, it doesn't reflect those demographics. In between 2015 and 2016, white applicants got 70% of the loans that were made in the Chicago Metro, whereas Blacks and Latinos only got 20% of those.
Combined. Yeah.
And when I look at the numbers between Black applicants who got loans compared to white applicants, for every one Black applicant who got a loan, 18 white applicants received a loan. So the numbers are pretty stark. And out of all the census tracts in the Chicago Metro, of all the top 100 ones top 100 in terms of number of loans made, the highest population for black population was less than 25%. So of those loans, of those census tracts, those neighborhoods that got the most number of loans, there are not very many Black people living in them.
Mm-hmm. This is another question. This one's for Aaron. Somebody writes, in my neighborhood, there were 22 white applications against 2 Latino and 1 Black. This person likely consulted our data. There are a lot of Black and Latino people here, so why aren't they applying? Do they not make enough money, or are they discouraged before the formal application? And this is from Census Tract 4056, that's Alameda County, California, where we are.
Yeah, so I thought this would be a good one to take because you can explain a little bit about what you can find when you go to the app on our website and explore your neighborhood and kind of what's there and what's not there and how you can read it.
And the app, I believe, is just revealnews.org/redlining. We'll take you directly to that app and where you can actually explore your neighborhood and check out different areas. Yeah,
you can just type in your address and it will give you this breakdown of who's applying for loans and who's getting them by race in your neighborhood. And so this particular listener lives in a neighborhood in East Oakland, which is rapidly gentrifying. And so the neighborhood is pretty evenly split between white, Black, Asian, and Latino. But as the writer says, almost all of the applications are coming from white people. So why is this? Well, the first answer to that question is, perhaps price is part of it. The neighborhood is rapidly gentrifying. It's getting more expensive. There is a lot of income inequality here in the Bay Area. The San Francisco Bay Area did not score as one of the 61 metro areas where people of color were more likely to be denied even after we controlled for income and other factors. So perhaps those income and other factors play a strong role. Mm-hmm. It's also possible that there's an issue of steering. Steering is another important concept in fair housing where people of color are discouraged from applying. So that would be a question to ask when you see those kinds of numbers. If you
Even
live,
given everything else being fair.
yeah, like if you live in a diverse neighborhood like this one, and you see that most of the applications are only coming from one ethnic group, it is reasonable to ask: are people being discouraged from applying? Another thing to know about the app, and that would be illegal, by the way. Another thing to ask about the app is, and the data you see, is it only reflects people who are trying to buy a home with a conventional mortgage. So we decided to focus on this because these are the good loans, right? These are not the ones backed by the government that have extra fees. These are not some kind of like janky predatory product. These are like 30-year fixed mortgages or 15-year fixed mortgages, the kind of thing that people can really build wealth with.
A baseline almost of
Yeah, it's like, and also it shows you how these companies behave when the government is not involved as an actor. Like, how do they behave when they're on their own? So there is the FHA market, the government-backed loan market, the VA market for veterans that are in this mix. Another thing that's not in the mix is people trying to refinance their home, people trying to take out a home improvement loan. And so that is something that we looked at, though, in our story, and we found that there were a lot of neighborhoods, and this is one of them, where people of color were coming forward and applying for these like refinance and home improvement loans, trying to take advantage of the gentrification, but they were more likely to be turned down when they tried to pull wealth out of their house or get a better interest rate than their white counterparts.
We've got one more question from the audience, but I just want to take this opportunity to remind you that you can always drop your questions here in the comments of this Facebook Live post. There are several more broad category questions that we actually got a lot of inquiries about and were able to categorize together, such as more readings about the history of redlining, some general questions about legality of the practice. Those will be answered in a blog post that we'll attach in the comments to this post. So just because Aaron and Emmanuel didn't answer your specific question doesn't mean that it's not answered somewhere in this blog post. Before we get to this last question for you, Aaron, I just want to ask one question about the analysis. Just because your analysis doesn't show evidence of modern-day redlining in a city, does that mean it's not there?
No. So just because, so we only have found 61 metros out of 409 that we looked at. So just because, you know, some of those metros that Aaron mentioned, like San Francisco or places like LA or New York, didn't show up on that list of 61, doesn't mean that this type of discrimination is not happening. This is very complex. This is a very complex data set, and this is a very nuanced discrimination happens in very nuanced ways. So speaking to the conventional mortgage and denying of conventional analysis, we had to generate one model for 409 metros, and those metros are very diverse in terms of population, in terms of median income, in terms of housing stock.
In terms of loan type,
in terms of loan type. So it was hard to kind of develop one model that would encompass all 409 metros. So maybe there's something going on in those specific metros that we didn't find that, you know, this model doesn't measure, that we have to tailor it more to those those differences and nuances.
There need to be some constants in any sort of equation,
yes,
right? Otherwise it doesn't work.
And also I would just say that you know, denial is only one part of redlining. I mean, if you think back to redlining in history and the way that the government drew lines on maps and shaded some neighborhoods red and told banks not to lend there and called them hazardous and said that and those just happened to be people of color neighborhoods, and that was the law until 1968, that is a crime of geography. That is a crime where you wouldn't see applications because no one would lend. Like, blacks need not apply, so that means no one's applying, right? So when we hear about the situation that Emmanuel is describing in Chicago, where there's this huge lending imbalance compared to the population, and it does not score as one of our 61 metros, it could mean that the discrimination is just taking place in a different way.
And then when we talk about a lot of things as a data reporter, it's, what's in the data is important, but also thinking about what's not in the data. So then thinking about those people who didn't actually get to fill out any type of form, that didn't end up in this HMDA data set, like that were flat out told no before they could even seriously inquire about a mortgage. That's another thing to consider.
Before they even became a potential statistic for
Yes.
you guys to use. Understand. Last question for Aaron. Have online services like Rocket Loans made a difference?
This is a really good question because, the Community Reinvestment Act, which we talk about in our story, this important law passed by Congress in 1977 that requires banks to lend in low and moderate income areas, it was written only to apply to banks and only to apply to banks that have branches in a city that takes deposits, because that's the way the world was in 1977. 99% of banks passed this law despite the endemic discrimination or problems that we've been talking about here. But you do have these mortgage brokers, right, that are coming up all over the country that have actually overtaken banks as the main lender in many markets. And you ask about Rocket Mortgage.
Right. I should say Rocket Mortgage from Quicken Loans.
Yeah, it's a product of Quicken Loans. Quicken Loans is the biggest and most important independent mortgage non-bank company in America. It's almost as big as J.P. Morgan Chase or Citibank. I mean, it's huge. And when we look at their data, we find that the disparities for Quicken Loans in particular are a little bit better than some of their big bank competitors. However, that's only one actor. And one thing that Emmanuel and I are doing going forward is we're looking at all of the other mortgage brokers out there. Private mortgage brokers, independent mortgage companies, non-banks, credit unions, all of these institutions, which make up, frankly, a majority of loans in many markets, that are completely unregulated under the Community Reinvestment Act. So stay tuned for that.
For sure. Okay, one more time. This is Aaron Glantz and Emmanuel Martinez. Their story on modern-day redlining is available at revealnews.org. If you have any questions, again, please don't hesitate to drop them in the comments here. And we'll see you next time. Thanks so much.